This is Chuck Carnevale, and I'm the Chuck in the Markets Up Chuck. And today's blog is titled Looking Ahead. And I just wanted to talk, there's still a lot of people that have been so traumatized by the recession that they can't really get their minds off of it. But yet, if we're going to be successful as investors, it's really imperative that we look ahead. And, I'm going to show a couple of examples here of some companies that have, really gone through the recession remarkably well. They have had some impact. Their earnings are down or expected to be down in 2009. Amphenol is one of them. It's one of the largest makers of interconnect products used in electronic commerce and the military and telecommunications, et cetera. But the bottom line is, as you can see, this company has really an excellent operating history. During the last recession, it did have a couple of years of down earnings, but as you can see, that was a great time to actually be an investor in Amphenol when you had an opportunity to buy it at a relatively low valuation. The recession took a lot of stocks down, as we know. I don't have to be reminded of that. But Amphenol, as you can see, fell from around 47.5 and got all the way down into the 20s. It subsequently recovered back up to 34. But this company, I believe, has a very, very bright future ahead of it. And as we come out of the recession, we should start seeing business picking up and companies, starting to grow again, Amphenol being one of them, and from that point we would expect strong earnings growth. The consensus of the leading analysts are looking for over 20% growth going forward. As you can see, Amphenol has an excellent track record relative to the S&P 500 and has done this for its shareholders even at these very depressed levels. But here's a stock that is, fell further than it should have, as I think this picture clearly tells, but is already beginning to recover, but yet still has more room to run. And my second example is Charles Schwab, the brokerage company. Obviously, this company is a discount brokerage. They did not get involved in a lot of the toxic paper that many of their competitors, the Merrill Lynches and so on, got involved in. They're having a down year, obviously, their money management business with asset values being down and so on. But this company is very well positioned for the future. They got a very strong balance sheet, generate good cash flows, and as you can see, their stock has already recovered quite nicely. Also, they're expecting 20% growth once everything begins to turn around and resume. Starting probably in 2010. This will be a down year this year, but it'll still be a very profitable year. Again, another company that's generated an excellent track record relative to the stock market for its shareholders. This is a stock that you can buy, we think, on normalized earnings very, very cheap. And its current depressed earnings, it's trading at around 18 times earnings. But if you normalize their earnings, their earnings should be, very, very strong going forward. And then the last example I wanted to show today was Kohl's. This is the retailer, of course, and Kohl's has gone through this recession extremely well. They've done an awful lot of things to get themselves lean and mean and really position themselves for growth. They're taking advantage of weakness in their competitors. You can see their stock has risen rather nicely also. We would expect this stock to be growing at 15 to 20% a year or better once everything stabilizes itself. Another company with a great track record, good balance sheet, good cash flows, and extremely well positioned. So the key and the message today is look ahead, because in the future, you're going to look back at, I believe, at 2008 and 2009 and say, wow, what a great time and what a great opportunity. Even though as bad as the recession was, it really gave us a great opportunity to buy some really, really good companies at low valuations. And by the way, I'm making the distinction, always making the distinction between companies like what I've shown you here so far and companies that don't have, the kind of operating, history. Here's Briggs & Stratton, an engine manufacturer. We all know the company, but the point is I'm not looking at companies like this. I'm looking for companies that have very strong balance sheets, are continuing to grow even in a recession. This may be a great turnaround story for those who are, like to be, invest in things more cyclical, but I like things that have good quality histories and good bright futures. This is Chuck Carnevale saying thanks for listening, and talk to you again tomorrow.